I want to talk about a mistake a lot of people continue doing even after years of investing experience. And that mistake is getting in and out of cash by timing the market. As in, if you think a certain asset is very cheap, you might allocate a lot of your cash to that asset. When you think the asset is expensive, you might sell the asset and get back into cash. And in general, it's not really a problem to have an opinion about the market, right? To think about, okay, this is cheap, this is expensive, and to act based on that. But using cash as your primary risk-off asset, I believe, is a mistake. Let's say you have played this investing game for quite a while now, and you are at, say, $1 million in net worth. Money expands by roughly 7% per annum. Okay, so money dilutes by 7% per annum. So if you've got $1 million just in cash, you're losing $70,000 per year. So roughly $200 per day. So that's pretty bad, right? It costs you $200 every single day, including Saturdays and Sundays, if you allocate it to cash instead of something else. But at the same time, we don't necessarily want to hold an investment that's super high in price, right? That's currently getting hyped up, where the media is talking about it, where maybe your taxi driver is asking you, should I buy this, right? You don't want to be allocated to this, but at the same time, you also don't want to hold cash, especially if it's over several months. So what should we do instead, right? Instead of buying low and selling high and using cash as the risk-off asset, it is super important, in my opinion, to have a risk-off asset that still returns something, where you at least partially beat monetary inflation. Now you have to decide for yourself what that risk-off asset is, right? It could simply just be fixed-term deposits. It could be government bonds. It could be long-term government bonds if you want to bet on a falling interest rate. It could be gold. It could be silver. It could be very risk-off stocks, so not necessarily tech stocks. It could even be property, right? It could be a fully paid-off property. If you don't lever up property, the property doesn't fluctuate that much in value. It obviously also doesn't return that much just on your equity if you already own it outright, but it's also pretty much low in price volatility. I believe cash should not be seen as a financial asset. I believe cash is, to a degree, a liability because it bleeds everyday value. It's a liability to own cash, especially to own a lot of cash. You need to have cash in something else. You need to invest it in something else in order not to lose economic energy. Cash is pretty much a service by the government, right? A highly taxed service, a service that allows you to exchange for goods and services for relatively stable price against the cash. You will always find somebody that will take your cash, that will give you cash. It's the most liquid, it's the most potent payment network. But it's really mainly a payment network. It's not necessarily a store of value, especially over the long term, but even over the short term. Just holding cash for 1 month, right? $200 almost every single day for 1 month. That's $6,000 that you're throwing away if you keep $1 million worth of cash. And you can simply just scale this down, right? If you've got $100,000 worth of cash, you're still paying $20 almost every single day, not having invested this. And again, you don't have to invest in something that's already super high and where you expect this to crash. But there's so many different asset classes that do not have a lot of correlation to one another that there's always some pocket in finance that's comparatively cheap.
This needs to go to 1 million or March buyers now will make millions. This is how you get the clicks on YouTube, but this is not how you beat the market. To beat the market in crypto, you need to be better informed than the rest. You need to be better skilled than the rest. You need to do better blockchain analytics. You need to track other people's wallets and know what is the smart money doing. It's the boring educational content that forms skill that doesn't perform so well on YouTube though. That's why I created the premium membership. Feel free to check it out. We are tracking influencer wallets to find out what they are buying before promoting this on YouTube. We've got a lot of tutorials to help with on-chain analytics, to help with wallet discovery. And of course, there are also plenty of chats where we help each other and also one-on-one conversations with me. So I'm messaging every premium member one-on-one directly. Once you're joining, you will get a message from me and you have the opportunity to directly pick my brain. Feel free to check it out, thebitcointrader.com. Link is down below.
I personally, for example, don't think that tech stocks are super cheap right now. I wouldn't buy Nvidia at the moment because at some point it might crash again. But I do believe that, for example, long-term government bonds are currently very cheap. When you look at various long-term government bond ETFs and you look at their long-term price development, yes, in the last month, they went up slightly, maybe by like 10% or so, right? The very long-term ones, like the 25-year duration ones, but they didn't go up that much considering how much further interest rates could fall, right? There's an inverse connection between interest rates and prices of long-term bonds. When interest rates go down, then long-term bonds go up and vice versa. And so I believe a lot of people are currently overlooking this, right? They only look at Bitcoin, where the market now is more than 2x on average in profit. They look at tech stocks that are also very close to all-time high. They might be looking at property, but property is also pretty expensive, especially given currently the affordability with those high interest rates. So the prices are high, the interest rates are high, affordability is super low. So that obviously crushes demand as well. And very few people are looking at long-term bonds, are looking at precious metals, not necessarily just the golds and silvers of this world, but maybe also other precious metals, right? Palladium, for example, maybe uranium. There's so many different plays in investing, and most assets tend to at least beat monetary expansion. They tend to at least fall less than 7 percentage points per annum, which unfortunately cash does, right? Cash doesn't necessarily lose 7% per annum versus consumer goods, but that's because consumer goods are deflationary over time, right? It's easier and easier over the years to produce that iPhone or to produce that TV. But for everything that's not getting easier over the years to produce, things tend to get more expensive by 7% per annum. That's why education gets more and more expensive. That's why medical care gets more and more expensive. That's why rents also tend to rise more than just 3 or 4% per annum, especially in the big cities where the supply is very limited, where you can't just build more and more. So next time when you're selling an asset, don't necessarily only think about the valuation of this asset as high. Think at the same time, what other asset is potentially low? What other thing could you potentially swap into? What kind of thing could you buy that's not cash, that you can hold for several months? Because again, you do not want to be in cash for the long term. You only want to be in cash with the money that you want to spend very quickly, right? Where you actually want to use the payment network. Cash has the big advantage of being a nice payment network, of being very liquid, but that's the only thing. It's not necessarily a store of value. Only use cash for spending, don't use it for preserving wealth. It's a mistake I see so many people doing, even people that actively invest. They jump between cash and an investment, and the investment and cash. Don't use cash to store value. Only use cash to spend value. Have some other investments that you consider low risk to potentially get into, that have very low correlation with this very hyped up asset that still beat monetary expansion. If you enjoyed this, feel free to give this a like. It helps the channel grow. Feel free to also subscribe. Feel free to also join our Telegram channel. There's a Telegram link down below. If you're using Telegram, looking very much forward to chatting with you over there. Cheers.